And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100, the NQ, for Sunday, May 2nd, 2021. Not a whole lot to be adding. After Friday's pretty much range-bound trade, we still remain within what I'm counting as a C-wave decline to complete the minor fourth wave correction. And within this minor fourth wave correction, it does include an all-time new high for the NASDAQ at 14,064, which happened last Thursday. And then, but as we discussed, right off of that high, the market dropped 235 points. And so that kind of pinned that high at 64 as the high for right now. I have full expectations that once this minor wave force is done, that the minor fifth wave advance will take out that high and then some. But back to the task at hand, and that's to complete this minor wave C to complete the, minute wave C to complete minor wave 4. Within that, I believe that we have now gotten the very first wave of that minute wave C down in, and we remain within the development and the tracking of the wave 2 upside correction or bounce within the ongoing decline. What can we expect? It does appear that we will at least go up and retest 13,978, 980-ish up into that area, or we could actually get all the way back up to 14,064 or close to that level before we turn and decline once more. We've been here before, we've seen it here, we've seen it here, and so the market continues to trade in that range, which keeps it in a corrective nature or corrective pattern, but we need to kind of be prepared for what can we expect for tomorrow. Well, upside, since it's kind of coming in with an upward bias as the Globex session begins, we could start to move up and break. Right now, this very 50% level resistance, it was support coming down, resistance going back up, is keeping a lid on things for right now. But we still have the Asian markets to open and add their trading to it. And then also we have European markets opening later this evening, and they're going to go through their march for what they need to do within this, within the NASDAQ. As far as earnings, we saw most of the larger tech companies have reported, and we still have other reports to come out next week. The largest that I can see right now is NVIDIA. And I'll likely go through that list a little bit more carefully tomorrow so that we can update and go through the rest of the week. So what I'm looking for tomorrow is that we're likely going to see continued upside. If the market does break up towards 13,926, then it likely is a continuation of wave 2. Don't forget, wave 2 has to be an ABC. And if we're doing this as A, and that's A, and here down here is B, we could say B ended here, and this is 1, and this is 2 of this little C wave that we need to rise up. If not, then if this completes the 2, then this is wave 1 of the third, 2 of the third. So you see, we have a bunch of combinations or possibilities of what could happen. Now, what will it do? We're going to let the market tell us. But we need to be prepared because, again, I stress that as a day trader, we trade what's in front of us. We don't get married to one side or the other. We allow the market to tell us what it wants to do and how it wants to get there. And that in and of itself can provide a lot of danger points during a day trader's day. And by what I mean by that is the market can move up and you're expecting it to get to a certain level, then suddenly it just drops down as they move in and out to correct positions or deal with positions, or just to handle what the algorithms are spilling out to us. So it's not always the easiest thing to trade. Range-bound markets do present their challenges. And so upside, we do have resistance right here at 86 or 87, maybe up to 90, 95, because that's where the 50-day moving average comes in. Again, this is on the 30-minute chart. And then we have resistance at 927. Again, that comes in contact with the 200-day moving average. So again, unless they really start to build and push, I'm expecting that these moving averages are going to keep things under control or put a lid on any rally attempts for right now. And if the market starts to move down, I'm definitely going to look for it to start to break below 13,812, which has held it thus far. Since Thursday, it has held the market to this, to above this level. It needs to start breaking below this level to get wave 3 in and get complete. Where do I think wave 3 could come down to? I would anticipate 13,707. And that's going to be a good 190 points from here. And is that possible? Yep, it sure is. And in fact, I would anticipate it coming soon, whether this goes up again to these higher levels or not. I am totally going to keep in my expectations here. What's going to change that picture for me is that if it breaks above 14,064 and doesn't look back. Now, what does that say? It's going to go back and change and push us back over to that preferred count. And we'll be able to look at it because the market will have laid out additional evidence as to exactly what all of this is. Until that point, I allow for it, but I'm going to be trading on a little bit different expectations. Again, always trading what's in front of me. So I will continue to do that. Look for the market to start to move down. It may begin, or it should begin, to accelerate if indeed we're going to be counting a decline, because it's wave 3. And within, even if I'm going to put the 2 there, or if I'm going to put the 2 here, it's still a wave 3, and it should begin to accelerate as it moves lower. So tomorrow, upside, I think we're going to be limited. If anything, we get back up here and it's an ABC flat, corrective wave 2, and then a third wave begins. And then I'm going to look for it to move pretty quickly, get itself below that 13,812 level, and then start moving down. There's 13,783, should not have any significance of that, maybe a resting point. And then it breaks down to that 100% level, which is 13,708, I'm going to call it. And now we're honing in on that 13,700.50 level, which the C wave needs to break before we can consider it complete. Can it fail at that level? Absolutely. So we're going to keep our eyes, we're going to keep, exactly what's going on and where the market stands if and when it gets down there. Ultimately, as we have discussed before, I would expect that the market's going to get down into this zone down in here. Top side of that zone is 13,625, we'll call it. And then we have 13,570 to 75. A very common area is going to be 13,488. So that's going to say, let's say 490. And we're going to allow for that to dip even lower to like 13,460. So that zone's going to be 490 to 460, or the bottom side at 450. So I think that the best zone for this wave, minor wave 4 to complete, is going to be between 13,490 and 13,450. Then we're going to start, and we should blast higher. I would expect that wave 5 is going to announce itself very cleanly, and we're just going to get a strong rally. And again, maybe it's going to be news driven, or just the fact that the market's just going to lift on its own. And we will track it out. We will continue to expand and put in new Fibonacci as needed But right now, I'm looking for a wave C down, and that's where I'm going to leave it. And again, trade what's in front of you. Use your moving averages. And again, I use a 1, a 2, and a 5-minute chart for my intraday trading. So as I'm day trading intraday, those are the chart levels that I use, and that makes your moving averages even more important. I continue to use my Fibonacci. You can continue to put Fibonacci on an intraday basis, which will be very beneficial. I'm going to leave it there. Have a good trading day tomorrow. And the next update will be Monday, May 3rd.